Last week I came across a video on YouTube where an ADX trading strategy was discussed. I was surprised as the author of the video claimed that this strategy works 92% of the time. That's probably a very profitable strategy, but what if we backtest it using an expert advisor? Are we looking at a holy grail strategy? Continue watching to know. And don't forget the usual thumbs up if you enjoy this kind of video. All Forex traders strive to build their profitable strategies, but this day is your lucky day. We're going over a simple ADX strategy with some examples for you to practice this trading method. This strategy seems to have a success rate of 92%, so basically if you place 100 trades, 92 of them will end up hitting the take profit. Let me first share with you this strategy before we backtest it using an expert advisor. No worries, I'll share with you the expert advisor for absolutely free, especially if it does work. Without any further ado, let's get into it. The principles of the Average Directional Index, or ADX, can apply to almost all tradable assets, including Forex pairs, stocks, mutual funds, and even futures contracts. ADX has become an exceptionally useful indicator for traders as it helps determine when the price is trending strongly. In many cases, it's the ultimate trend indicator. After all, the trend may be your friend, but it sure helps to know who your friends are. Before we go any further, let's add the indicator to our chart. If you're on TradingView, you can simply hit on Indicators and search for the Directional Movement Index. Once you find it, simply double-click it and you'll notice that it's been added to your chart. The Directional Movement Index, DMI, is a technical indicator that measures both the strength and direction of a price movement and is intended to reduce false signals. DMI helps in determining the price direction and the strength of the movement. It does so by comparing the current price with previous lows and highs, drawing lines of positive directional movement, plus DI, and negative directional movement, negative DI. In general, the larger the spread between the two primary lines, plus DI and negative DI, the stronger the price trend. If plus DI is way above negative DI, the price is on an uptrend. On the other hand, if negative DI is way above plus DI, then the price trend is strongly down. The ADX measures the strength of the trend, either up or down. A reading above 25 indicates a strong trend. Many traders will use ADX readings above 25 to suggest that the trend is strong enough for trend trading strategies. Conversely, when ADX is below 25, many will avoid trend trading strategies and will probably wait for a breakout or simply use a sideways trading strategy. If you're using a momentum trading strategy and the ADX reading is above 50, you might avoid exiting the market, as there are high chances that the trend will continue. The ADX trading indicator is a dynamic way to look at the price action. As you can see here, low ADX is usually a sign of accumulation or distribution. When ADX is below 25 for more than 30 bars, price enters range conditions, and the price patterns are often easier to identify, especially on high time frames. Price then moves up and down between resistance and support to find selling and buying interest, respectively. From low ADX conditions, the price will eventually break out into a trend. That's the usual phrase that follows any price consolidation. For example, we can see here that the ADX reading moved above 25 and the price breaks out into a clear uptrend. Before we begin backtesting this strategy, let's look at the buy and sell conditions. Let's begin with a buy scenario. First, we need to look for a strong trend confirmed with the ADX value greater than 25. Once a strong trend is confirmed, we'll go long when plus DI crosses above negative DI, which is the condition for an upcoming uptrend. We exit the trade once negative DI crosses below plus DI. Let's look at an example here. I'm going to increase the thickness of the ADX line to help us distinguish it from the other two lines. The ADX line is in red, and plus DI and negative DI are in blue and orange respectively. We can see here the plus DI line crossed above the negative DI one, and the ADX is above 25. We go long immediately. We can see that the price continues its upward momentum. The two directional lines cross over here, which is the moment to exit our position. This was a successful trade. Now let's look at a short setup. This is the Pound USD daily chart. We can see that the negative DI crossed above the plus DI line and the ADX indicator is above 25. We go short immediately and exit the market when the two lines cross over again. Let's see what happens next. Well, that's another successful trade. Now it's time to test this strategy using an expert advisor. According to the author of this strategy, the setup works best with the Euro-USD pair on high time frames. This is the indicator made according to this strategy. I'll share with you the link to download it at the end of the video after revealing the final results. So let's adjust the settings. We'll use a $1,000 virtual balance and allow the EA to place a buy and sell position. Other than that, I want you to choose 14 periods value for the ADX and 25 as our entry filter. Finally, let's place trades with a fixed volume of 3 micro lots. That way we can remain longer in the market and get an accurate drawdown value. Once done, simply click OK. Now we'll adjust the time range. We're backtesting on the daily chart, so let's go for a 3 years time interval. Once done, simply hit on Start. I'm going to speed up the process as usual. While waiting, don't forget to hit the thumbs up and leave a comment with the strategy you want us to review in our coming videos. We've just completed backtesting this strategy. Let's look at the results. We can see that we had 33 trades and the success rate is only 39.39%, which is extremely different from the 92% claimed by the author of the strategy. The drawdown is 65.5%, which is incredibly high. We've lost more than $446. I think we can all agree that the DMI crossover strategy doesn't seem to work with the rules mentioned earlier. But I noticed something. If we check the trades list, we'll notice that the profit made out of the successful trades is extremely low as compared to the amount of money we lost in the losing one. Maybe if we go for a fixed take profit and stop loss, this strategy will work better. Let's do some changes and run the backtesting process again. We'll go for a 1-to-2 risk-to-reward ratio this time, so we'll choose 30 pips as our stop loss and 60 pips as a take profit. We'll leave the other settings as they are. Let's run the backtesting process again and see the difference. These are the final results. We can notice that the strategy is profitable now. Again, we had 33 trades in total. 15 of them ended up hitting the take profit, which gives us a success rate of 45.45%. The drawdown recorded is fantastic. 6.17% is a healthy rate, and we managed to make a profit of $101.29. This isn't enough to say that this strategy is profitable at the moment. Plus, the low number of trade opportunities is a big challenge. Now we need to analyze the losing trade and adjust the strategy accordingly. Let me know in the comment section if you want me to make a second part where we try to optimize the strategy and come up with a solid one that we could all use to trade Forex or other financial markets. Make sure to subscribe to the channel so you'll be notified whenever we release a new video. Happy trading!